This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
It's interesting is that as we're tapping into this sort of subset of owners that are owning these smaller parks that I would argue that right now are considered less desirable, you know, as we're coming and we're purchasing them, they're saying, oh, you need to know Bob, you need to know Jimmy. So there's this heavy referral. We're able to get a lot of these without broker involvement. We're actually doing some nice owner financing on these to start pooling, creating the portfolio.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. You know, the Amish have a saying, the faster a barn goes up, the faster it falls down. Now, when people are jumping into the real estate space, this is also true. Usually they want the returns to be instant and fast. And, you know, I understand that they probably want to get out of their 40-hour job or they need the extra income, but it never turns out that way when it comes to real estate. It requires learning, planning, diligence, time, and of course, execution. Now, today's guest knows all about this topic. He has a track record of building strong partnerships, executing win-win negotiations, and finding great opportunities where other people are just not looking. Now, he's got a 20-plus year technology executive career with 2 IPOs under his belt. He's also a real estate investor, as well as an educator and an author. Additionally, he's the co-founder of Wealthward Capital, which is a private equity company with close to 3,000 units. Now, he and his team at Wealthward help investors and entrepreneurs achieve financial independence through financial education and creating passive income portfolios. So with all that, I'd like to welcome Christopher Nelson to the show. Christopher, buddy, thanks for coming on, man.
Hey, thanks. My pleasure, Augustino. I am so excited to be here.
Yes. Well, happy to have you on, man. Now, guys, if you like what Christopher has to say, you can reach him via the contact page at wealthward.com. Okay, Christopher, go ahead and tell our listeners a little bit about your journey.
Well, my journey, I think, started like many others where I was in a W-2 job and I was trying to figure out a way to get to financial freedom. Now, as you and I spoke, one of the things that I figured out first and foremost was working in technology is that the easiest way that I could actually generate some equity was actually investing in myself, seeing myself as the asset, the skills that I had, building those, and then trading my time and talent for equity at startup companies. Now, while a lot of people say, well, wait, that's really risky, like anything else, there's actually a risk profile. You could actually go to work for public companies that give phenomenal RSUs and actually match your salary with equity and get liquidity right away. You can also work, which is what I love to do, is value add, like I did with apartment buildings. I also do with technology companies, which is I want to go to somewhere where they're going to IPO in 18 to 24 months. They just need that lift to get over the edge. Or you can go high risk, high reward, which is what everybody focuses on. But I'm sure that we wouldn't start out in real estate with a bare piece of dirt and saying the first thing I'm going to do in real estate is go build a home. Well, that's what I did is I spent the last 10 years of my technology career working for 5 startup companies. And I'm here to tell you that 3 out of 5 of those went through an IPO event. So how I got started really in real estate was taking some of that technology equity and really starting to diversify it as a limited partner.
Right. Well, I think part of it is the first step is managing your career properly, right? So you're basically using the powder that you got from the IPO paydays and using it to really fund what you're doing today to some extent. I know there's more to it than that. We'll get into that. But I mean, part of it comes down to really picking the right career. And we talked about that in the green room a little bit, picking the right career and executing properly. And then, I mean, that's probably the biggest thing. I mean, we talked a little bit about it. I mean, I think we all can agree that for some people anyway, the job that you pick, you could have probably done a better job, more research, more due diligence on the company itself. But I think you've become somewhat of an expert, at least in terms of managing your career when it comes to picking these companies. It was no accident, is what I'm basically trying to say, right?
That's right. That's right. Is I saw this pattern evolve. I saw people that were working for, company after company that was going through an IPO. I saw it on LinkedIn. Like I'd say, okay, wait, this person has, worked for Apple, then they went to work for Twitter, then they went to work for, other pre-IPO companies. And I saw this portfolio that they were creating of companies. And I said, how do they do that? And what I discovered, in networking and talking with people is that, like anything else, you have to actually study the playing field, you have to be intentional, and then you have to go execute, right? And I think for many of the listeners, I think for all of us that want to get to this goal of financial independence, many of us are going to get there through our W-2 jobs, right? I don't like being the one who paints this fairy tale that everybody can become a real estate entrepreneur, because that's not for everybody. And I want to make sure that people realize that, because there is a lot of challenge and risk involved. But I do believe that everybody can be financially independent and become a passive investing professional where that's all they do, because I think that's really quite achievable for most people. But you have to focus on, what am I getting out of my W-2 job, and how do I actually get the most out of that so I can then launch into what comes next.
It's interesting. You said a word that really struck a chord with me. You're acting with intention, right? Mm-hmm. That's probably one of the biggest things right there, is that it doesn't matter what it is you're doing. It's even if you're someone listening right now, their job is not going so well, their boss is breathing down their neck, or whatever the case may be. But if you're intentional about what you want to do with your future, that's really what should be driving you. But in your case, you acted with intent. You did the research. You looked at the careers of the individual people that got them to that IPO stage. And by the way, for those people who don't know what IPO is, it's initial public offering. It's when you take a private company, they put it on, and they basically go public. And when they go public, there's usually a very big payday at that point. It's a very important day for a company to go public. But it's not glitz and glamour post IPO. I know that for a fact. I've been through it. So. But at any rate, so I guess you could say that in your case, you were very, very intentional about picking those types of paydays. And but now what you've done is you basically rolled all this cash, because with a payday, and you negotiate, I imagine, a nice big chunk of stock. So when the IPO does hit, you can then take it and then roll it into something like a hard asset, i.e., real estate, right?
That's right. Well, because it's a very interesting story, as it happened in steps, right? And I do want to touch back on intentionality. It's so important that people stay intentional. I think that for myself, I know that the first job that I selected when I came out of college, like I did a ton of research, and I wanted to figure out where I was going to work, who I was working for, because I knew that was going to launch my career. And then I noticed that as time goes by, people become less intentional about that. Like, okay, what's this job? I just want a job, but they're not thinking about what's the next building block in their career. And so I think it is so important to move with intention. But for myself, as I move with intention, I got this big equity payday, and then I really had okay, now what? Because there is no roadmap that says once you come into, you have a multiple 7-figure payday, like literally in an instant, it happens, floats on the market, you own these shares, and it says, boom, here's what it's worth. And if it comes out and it's double, okay, what do you do? Well, like anything else, you study and you divest, you start taking this concentrated position. And to your point, I wanted to get into something that was going to send me checks. I wanted something that was going to provide income. And at that point in time, in 2012, it was really all about, cash producing real estate, right? And we really also wanted to make sure that it was bulletproof too. So this is where we started creating a strategy and doing the research to understand, what is conservative underwriting? What are markets that are performing really well? And where do we need to invest so that if, there is a recession, if there are challenges and headwinds in the market, that these assets are going to continue to perform.
Hey, Agostino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me. Yeah, and we talked a little bit about that in the green room, right? These assets that you're buying. I mean, so far, like I said before, you had 3,000 units thereabouts. I think probably more than that now at this point, probably, right? It sounds like.
Well, more and less, right? Because we have some that we've gone full cycle on. So of the original 10 assets that we've purchased, we've exited 5, and we actually have 2 that we're positioning to sell right now. And then, yes, we've gone and we've acquired 4 more of, or actually 5 more of multifamily. But then we're starting to reposition a lot of that cash into another asset class that many people may know of, which is mobile home parks, because we see that now moving forward as number one, more cash flow, because at the end of the day, we want to make sure that as the market for multifamily, cap rates are getting compressed, cash flow is getting pinched. We need to, as cash flow investors, look for where is that bulletproof cash flow. We're finding that in mobile home parks because there's a, shrinking supply. The demand is ever increasing. And so we really want to, in the next 12 to 14 months, acquire as many of those assets as possible to hold for whatever challenges may lie ahead.
Right. And your strategy for this pivot is really a hedge against inflation, a hedge against an upcoming recession, because
that's right.
And listen, I'm no fortune teller. I think most of the audience is aware of that, right? I'm not a fortune teller, but I would say that having been through something like this, the 2008 crisis, just like you have, we know it's cyclical. We know that you can't print trillions of dollars and not have any repercussions from it. So I think we're going to see this slow down, but I think that the mobile home parks are very interesting. They're very, very sticky. They're very sticky. They're hard to find. It's very competitive, but they're sticky because you technically own the pad that's below the home that's on top of it, right? The home is still owned by the individual inside. Maybe talk a little bit about your strategy. Like, that's a very interesting strategy. Is that one of the reasons why you jumped into that asset class?
It is. I was really taking some time and exploring a lot of different asset classes. I looked at self-storage. I am still very interested in industrial and triple net lease. And then I saw mobile home parks, and I had networked in and had a relationship with somebody who was an operator who was executing a bit of a blue ocean strategy. I'd known some of the larger operators that, they look primarily for 100 pads and above. They're looking for 4 or 5 star parks, in a lot of prime locations, which again are performing very well, hyper competitive. And again, you're seeing some of that cash flow squeeze. Where Bo, my partner, was operating was, number one, in a singular market. He was hyper focused in and around Fayetteville, North Carolina, and was looking to acquire the parks that nobody else wanted. And still at this point, a lot of people being very focused on 100 pads or above. The 90 pads and below, these are still great parks that have great bones in them, can be operated very well, but people don't see the opportunity to aggregate those parks as a portfolio, operate them with the efficiencies of scale. And what we found is a tremendous buying opportunity, because the majority of owners are mom and pops who've built them, 30-40 years ago, relatively low to no debt, and they're running it as a cash business. What does this mean? It means that they collect cash. They may collect 10 grand a month, put 8 in the bank. So it's not going to appraise for everything that's actually written down. And then they're also very tired, want to get out of the business. So sometimes they're operating. We just purchased a park, 48 units. They're operating at 30% occupancy because they can. Because that's all they need to make the money that they need for the month, but it's not an optimally operated park. So our value add is just making sure that we're touching those homes, getting the right tenants in there and bringing it up. And we're actually then, able to truly change the value of this park, in just a couple months.
Nice. Now, because of the size of these parks they're going after, under 100 units, are you guys setting up a fund, or is this are you syndicating each individual deal?
Well, so that is actually a very astute question, because we are creating a fund. So we had a fund that was open from August. We just closed it, raised $4 million, and we acquired 300 pads, 250 homes. But now what we've done is we've gone and assembled another collection of smaller parks, and now we're going to go and we're going to syndicate that and raise to that specifically. And I think we're going to use whatever tool is in our tool belt that lets us, acquire the parks for the right price and be able to just deliver a high value, and high income return for our investors.
Nice, nice. Now, one of the things with parks, from what I understand anyway, is that there are not exactly a ton of these things around, right? And you also have the whole not in my backyard scenario where people just don't want mobile home parks. Getting the permitting for that is very, very tough to do. I don't even know if it's possible to do it anymore. I guess it depends on where you are. So how are you guys competing or finding these types of deals? I mean, I know the mom and pops. It sounds to me like you're just hitting the phones and see if you can shake them up a little bit. But are you worried about the finite amount of supply of these types of assets?
I think, it's interesting because I think perception can always be skewed by somebody else's lens. And so when you hear that, I think what you're hearing is these large park operators that are buying these 5-star retirement parks that are near the beach. Those are obviously hyper competitive, and those are actually, getting scooped up left and right because institutional dollars are coming in. Let me give you some statistics. In the Fayetteville, North Carolina MSA, there are 400 mobile home parks. 400. In that MSA that already have, the permits, that are already operating, and 100 of those are 100 pads and above. We have just purchased 11 parks. We're getting ready to buy 4 more. So we bought 14 out of now a total addressable market of 300 more parks that we can acquire. So for us, we don't see any limit in supply. And again, we're acquiring, 2.5-star parks, and we want to get them to a 3.5. So again, we're playing in this area that is truly that workforce housing. We're not trying to buy anything that's deluxe, but we're trying to provide good, safe, affordable housing to the workforce. And so we're not seeing a lot of competition. We're seeing a ton of supply. And it is interesting that in that same area, one of those 100-pad parks was recently purchased because right in front of it, building a Class A building, and they don't want to look at it. So they tore down a 100-pad park. And guess what? Those residents are going to need to go somewhere. So the demand for what we're purchasing is just continuing to grow. So this is where we don't see that same impact of supply because of where we're participating. In fact, we're seeing a huge opportunity. And as we talked about in the green room, we are on a buying spree right now. We're seeing that there's still not a lot of desire for these types of parks. We believe that sentiment could change as people start seeing that opportunity. So our goal is to try and get 3,000 pads in the next 3 years.
Nice. So are you really pushing for this diversification as a hedge against recession as well? Like, are you generally concerned about it? I mean, I know you've been through 2008.
Yes.
Guys like us are way more sensitive than the younger folks that are coming up.
That's right.
We're seeing, I don't know how bad it's going to get.
It's a hedge against inflation. It's also, the ability to buy an asset class that they're not making any more of. And it's also, the ability to be getting some, growing cash flow, right? Because to your point, we're trying to lock in now. And just as inflation is ticking up, being able to, slowly and incrementally pass those on to, the renters as well, and be able to, protect all of that, the capital and get some of that forced appreciation.
Nice, nice. Now, maybe just touch on how you're finding these deals then, because obviously your market very well. Fayetteville is a strong market. How are you finding these guys, like these deals that are willing to sell? Like, do you have someone there, boots on the ground type scenario? Or are you just hit the phones?
Boots on the ground. So I'd say that, one of our partners is just out there, has spent the last 20 years in Fayetteville being a part of the military out there in Fort Bragg. And so, he's on the ground. And I mean, it's interesting is that as we're tapping into this sort of subset of owners that are owning these smaller parks that I would argue that right now are considered less desirable, as we're coming and we're purchasing them, they're saying, oh, you need to know Bob, you need to know Jimmy. So there's this heavy referral. We're able to get a lot of these without broker involvement. We're actually doing some nice owner financing on these to start pooling, creating the portfolio. But we're, between what we get referred into us, and we've definitely mapped out where all the parks are through doing some calling, having a virtual assistant call down and get the map. We're just literally trying to go through and just execute a very systematic land grab.
Interesting. And you mentioned owner financing too. So, because I think you did say early on that many of these guys, they own these assets free and clear. And so for them, it's like to do an owner finance scenario, they're avoiding all of the crazy taxes that come along on doing a massive sale, right?
But they are. And then we're also looking at, different ways that we can partner with these owners and actually have them 1031 exchange into, an ownership where we're owning it, and then they can actually go passive and again, avoid the tax man. So, we're seeing a lot of potential and possibility to just really sort of ramp up this acquisition stream.
Now, I'm curious, how receptive are those folks when you first approach them on applying these different strategies? And I'm just assuming, and shame on me if I'm wrong here, but some of these guys may not be the most sophisticated folks. Like if it's just a small mom and pop, they've only had one asset for probably their entire life. Is it usually a hard sell trying to convince them to do an owner finance scenario or one of these other type of really creative type of ways of avoiding the tax man?
I'd say like anything else, the first couple people that we had to convince of this, I'd say we're skeptical. Now we have a track record. And it's important to understand that the people who have built these, they do also have a lens where they see this as a legacy. And they don't want the man to come in and just sort of grind down on their tenants. And what we're doing is our brand is Thrive Communities. We really want to allow our tenants to thrive. So we're coming in, we're doing a lot of landscaping. We're creating community gardens here, something that is really, low dollar, but high value to the tenants. And when they start seeing our other parks and what we've done, and then they also have a word of mouth reference, you'll find that 9 times out of 10, 8 times out of 10, they really want to sit down and negotiate because they see an opportunity to cash out, mitigate some tax impact, and then also pass on their legacy and have it be a part of something that, they believe in the brand.
Yeah. So it sounds to me like you touched on this earlier. There's a network today. You get to take advantage of buying an asset, using those creative finance methodologies, getting introductions to possibly other people that might be willing to sell. You become part of the community.
That's right.
And Fayetteville's big, but I mean, if there's only X number of parks in that market, most of the time those guys know each other, right? It's a community.
Yeah, they know each other. They talk, and I mean, we've literally purchased parks now. I mean, now the interesting thing is, this whole perception of, oh, we just want a 100-pad park. We've actually started purchasing blocks because, hey, Jimmy referred us to Sally, who referred us to John, and so we're just buying up these small parks that are now buying up these blocks because we're just getting referred down the road, and again, and this is an area where not a lot of people are playing. So we're continuing to see this opportunity. And yes, we do see the, headwinds coming in the economy. So our major focus right now is to just really, acquire.
Yeah. But I think it's also worth noting though, too, that the very, very, very first time you even made a pitch to try to apply some of these creative strategies, it took you guys really nailing down what you're going to say, how you're going to say, what the plan looks like, and really having that scripted out. I would imagine. I mean, that's what I would do anyway. Script it out.
Script it out. Practice it with each other. Come up with, okay, let me play contrary. Yes, and we still do that. And then this is where we also continue to get feedback from the different park owners on, what do they want to see? And, the interesting thing is now as we're creating this partnership, we're also seeing an opportunity to create almost like a, park owner advisory board where they can give us advice on, how do they really want some input into how do we want to see it run? And then also, creating this collective of, hey, come on into our club. We're now the, passive investor ex park owners, how do we create that community so that then they're more of, becoming fans and then doing our work for us.
Yeah. Excellent. Now, in the green room, we're talking about our backgrounds, and you have a strong tech background. So do I. Former CIO, just like and you're still doing some CIO work right now, some consulting work.
That's right.
What's funny is that when I was a CIO, I would never ever imagine that I'd be doing what I'm doing right now, and I'm so happy that I'm doing it. right?
Yeah.
But I would say that there was those limiting beliefs that would really creep in and really stopped me anyway from really taking action early on, right? How did you get over those limiting beliefs? How did you make that transition and know that it was the right thing to do?
Well, I mean, yeah, it's so interesting as you're focused on your career, you have all these things. I think it was, there's this psychological syndrome, and they call it sudden wealth, right? When you actually go and you actually get these big paydays, and part of what comes out of that is some fear and anxiety of, okay, I don't want to be the idiot who makes the money and then loses it. And I have to be honest that it was a little bit of that. I don't know if it was scared into action, right? Where I realized, okay, I actually have a sense of urgency. I have to do something with this, and I have to move with a sense of urgency. And that's really what motivated me to start really digging into real estate, to start learning how to underwrite investments. And more than anything, the one skill that I was able to really translate is I developed, a great ability to network. And as I brought that into real estate, I realized, oh my gosh, networking is real estate. And the more than I just, tap people on the shoulders and ask for help, that truly opened up a world for me of education, of learning, and being able to execute. And that's what really got me to where I am today.
Yeah, I think that's the parallel, right? It's a networking business. Real estate is all about networking. Same thing in the tech world. It requires a whole lot of networking with other folks, because when you're building a tech team, as a guy who's done it, just like you have, it's usually who you know, and it's usually your staff might know somebody. Hey, I know a great network engineer.
That's right.
We should hire him on. That kind of thing. It's usually how it starts.
Yeah.
And that's the same thing. I think I would say the same thing times 10 when it comes to real estate, because now it's like your team members are your partners. You're the people that are throwing down into your deals, and those people have a very different take when it comes to throwing down a bunch of money to get it on your deal, right? Very different take.
Yeah, and you have to lean in, and you have to learn from each other. And I think it's interesting, there are tons of great parallels. I mean, I think that I've learned from, coming from technology and mapping that into real estate. But I think, these skills of, understanding how to be a good partner, how to be a good, leader, and how to be a good negotiator, a lot of those things like really translate over. Right.
But I think it also goes into really spending the time the same way that you managed your career. You spent the time to understand. You spent the time to understand the people that are in the startup, who the team members are, what they've done, and then making that decision to join them and help them get to where they want to go. Right. And
that's right.
Same thing goes for real estate. This is not a flash in the pan. This is not I'm just going to go in and build a property and make a bunch of money and then that's it. This is not Bitcoin. No. This is not NFT. This requires a high degree of my opinion, it requires a high degree of dedication to the business. That's really what it is. And very rarely does someone get into a deal and become a millionaire in 6 months. It seems to be an overwhelming thing that you see on social media. This is totally not true. Totally not true. I mean, what's your take on all that?
Yeah, I mean, it's so interesting that so many things can just get overhyped, and people want, and I think part of it is cultural, right? We as Americans want the easy button, right? We want to be able to press something and we want to be able to, lose fat in 6 days, when the reality is that the road to success is usually long and it's usually very challenging. But if we apply ourselves and we're intentional, we can get there. And I always talk about, we have to be resilient. We have to be intentional. And those to me are just two, important ingredients into getting to the success. But I do think that right now I am seeing in real estate, especially, it's very overhyped. I see a lot of people coming in and thinking, I saw an investment that came across my desk of, some young guys purchasing a apartment building here in Austin, and they were showing a, compressed cap rate at the end. I mean, a lot of things in underwriting you don't do because we're going to flip this thing in 2 years. And I don't really think that they were thinking about their investors. I think that they were thinking about, this is the way that we can put $1 million in our pocket. And we all have to take a look at that. We all have to be educated. And I think that, many people I think have said that, working in real estate is a get rich slow business. But if you are steady and methodical, you can achieve the things that you want to. But like anything else, you got to grind.
Yeah, that's right. It's the only way to do it. I totally agree. So we're coming to the point in the show here. It's I'm going to wind it down. So someone's listening right now. We talked a lot about different asset classes, the slow grind to getting to where you want to go, a bunch of different things. What sort of bulletproof advice would you have to offer the listener right now?
Well, I'd say the bulletproof advice that I would offer listeners is invest in yourself. Because I think whether you're in a W-2 job and you're investing what I call your career capital, which is your education, your experience, or your results, right? Those are the three things that really make up what you are and what you can trade your time and talent for equity for, is that career capital. It's also the same thing that's going to help you move forward in investing as well, is you need to get educated. You need to study the numbers. You need to understand what a good investment looks like. You need to also then gain experience, right? You will not gain any experience on the sidelines. You need to get in there. You need to put some dollars in play. And then you need to drive the results. What does that mean? It means that you want to manage your investment. You want to watch it. You want to then understand what went right, what didn't go right. And then you need to iterate, and you need to then get back at it. Because I think on both spectrums, it's this investing in yourself and through education, getting experience and driving results, that then you will able to move forward with intention.
Excellent. All right. Well, good. And I know you have a book coming out here soon too, right?
I do. Yeah. So I have a book, and then I'm launching a podcast for those who want to learn more, they can go to techcareersandmoneytalk.com. You can get on my email list where you'll hear updates on the book, but I will be publishing From No-Do to IPO later this year. And so that is truly a book that will be an instruction manual. It's not just for techies, right? I know that while we happen to be techies and we loved coding and things like that, whether there's stories in there about somebody who was in marketing for a product company who went to the Silicon Valley, had a phenomenal exit through acquisition, right? Or other people who realized I have finance skills, I have sales skills, whatever you need, those companies need it. But go and figure out how to always work for equity if you're going to be in your W-2 job. The other thing that I'm working on, as I mentioned, is I have the mobile home park. So if you want to learn more about that, you can go to thrivecommunity.fund, and you can learn more about what we're doing there. There's a free webinar for you, so you can learn about myself, the team, and why we believe that right now is the time to be getting great cash flow from mobile home parks. And then said it at the beginning of the call, if you go to wealthward.com, hit contact, there's an easy way to just get some time with me. And I'd love to have a conversation and understand if we can help in any way.
Excellent. All right. Great. All right. Well, guys, if you want to reach out to Christopher, you can reach him via his website. Like he said, wealthward.com. Don't forget to check it out. Hope you got some insight on the slow grind to really getting to what you want in the world of real estate. I think it's possible for anyone to really do it if they are willing to sacrifice their time, sacrifice their energy, and really study this material. If you do, I promise you, it'll always work out. But it requires a great deal of dedication and some sacrifice. And of course, in the mobile home parks, always fascinating asset class. I'm glad we had an opportunity to cover that too. So definitely touch base with Christopher. He can certainly help you out if you want to get in with that. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.